rate level. But as per my understanding, that is actually written by Mr. Gann. It hit balance point level. So I just started uh, researching on the same topic, which was discussed by my student, and I found something very out of the box thing basically, because Mr. Gann never told in his writings about this particular level, how to calculate this level. So this is what actually I just created this particular thing, and the morning itself, you will get these levels, and these are the main levels by which options start moving. And as we all know that in options we have one concept. Let me explain whiteboard what that concept is. See, we have two things. One is call, okay, and one is put. Okay, so if you are very beginner and very new to the market, let me explain you when to buy a put and when to buy a call. If market is rising up, then we are looking for the opportunity of call. And if market is going down, then we are looking for the opportunity of put. So once the market is falling, the put price will rise. And once the call price is rising, sorry, the market price is rising, the call price will rise. So this is how call and put options work. So now what happened if market is rising? As we know, call must move upside. And in the same way, put must move the downside. So now this is balance. If market is moving upside, then suppose this is a kind of oscillator. So if this thing is moving up, then this moving go to the downside. Or in other words, it's type of weighing scale. Okay, it's a weighing scale. Sorry for my poor drawing, but this is a weighing scale. So if weight is on put side, that means the bias is in put side, that side will move upside and that side will move downside. And this is a zero level. Okay, this is a zero level. And wherever there is a pressure, the weighing scale will move to that direction. So we have to find this particular level, this zero zone, or in other words, the equilibrium point, or you can say a balance point to the market. So now there is a very myth. I found that it is a myth that they are giving you a one price for both call and put, which I found that by my researching things and by the reading of Mr. Gann, I found that it is sometime, most of time, maybe it will work for them. But whenever you are on a single price for the both things, most of time the movement come like a rocket, and you are not able to capture put or not able to capture call. Whatever there is, you are not able to enter at the correct price. So after my researching, I found that for every script, there is a balancing point. As Mr. Gann said, every script have its own vibration. Similarly, every script have its own balancing point. So after researching a lot, I found that there is a different balancing point for the call. Similarly, there is a different balancing point for the put. I used to say that BPL, that is not below poverty line, that is basically balancing point line, and that BPL will definitely boom like a BPL television in 90s if you are born in 80s basically. You know about this band, one of the famous band in the market. Now this BPL will definitely work in options. So let me show you on charts how this BPL works. And first, let me show you the levels also, which I calculated. Wait for a while. Sure. Okay. So these are the BPL levels. And with BPL level, you always have a exit points, which is known as stop loss. So whenever you are entering at BPL level, you must know about your exit point also. So I saw a lot of time the BPL level works between these two lines, basically. These two are very important. Mostly the first hour of the market, either the call side or the put side will come retest these two levels and move into one direction on the upside. Either it's a put side or it's a call side. So our main concept is basically this BPL line, this BPL level. This BPL level is very important for us, and that will tell us how market will react and where the market is moving. So I just plot these levels on my chart, and let me show you on my charts how exactly it is working. So it is not necessary that you need to look at this put or that call or some strike prices nearby or OTM or ITM, ADM, whatever. In this concept, everything is working there. Every strike will work, but not far OTM and not far ITM. Yeah, you can use far OTM for the selling purpose if you are a seller. That will work definitely 100%. You will get a good uh, point to sell that option. So now see what happened there. So this is 21,500 call and put for Nifty on 31st December. Oh, sorry, 31st January, I'm sure this. So our BPL on the call side is 145. Here you can see. And on the put side, the BPL is 129. Okay. So now what happened there? As I told you, we are looking for the balancing point. So at the first candle, uh, if it is going up, you can see the call is not coming down. That means the balance is still not in proper manner the market. After that, it moved up. It retested our 141 level, 145 level, in fact, on the call side. But here again, you can see the market is not moving down to our BPL level in the put side. So now what happened at this level? At this point, see what happened. 193 is the upper level of BPL, and it is crossed at 933. You can see 933 candle. On the call side, see at this level, you can see the closing price. So closing price of call is at 207 rupees. And on the similar side, on the put side, you can see on the downside, again, here is the price closing price. And here you can see it closed at 108.65, which is below 129, and that is above our 193 level. So this is the balanced point for the market. Now, market should run on the one direction, either on the if you are talking about the call, that the call will move only on the upside. Similarly, on the put side, the put will move on only to the downside. So now what happened there? If you are entering at 193, so let me show you what will be your exit point. So here we are at 193. We are entering. Our exit point is 169. I'm rounding off it to 169 from 169.76. You can use the exit level also, but I used to round up that level. So you're entering at 193 and your exit point is 169. So let me show you on a chart. Uh, let me enlarge that chart. So now here you are entering. So our stop loss is 169. Let me put that also. Six nine. Here. So see, once you entered in a price, You don't need to enter immediately at 207 level because that is already above 14 points. So now we are waiting, let it come back to our level of 190. So here you can see it touched 193. You are in the trade. The stop was 169. From 193, it moved up to 293. In fact, 295. In fact, the high of the day is 304. So you are entering at 193 and the rally is in your pocket is around 304, which is somewhere around 100 points in your pocket. So this is how the market balance itself. So I hope you guys understand this thing. And if you want to learn this particular strategy, I'm just uh, sending my in a description box. You will get one channel link. You join that channel. I will not share all things on a regular basis or on a live basis because I'm a full-time trader, so I have less time to update things. But yes, after market hours, I will definitely show you how these things work. Check that. And if you are interested, you can ping me. I will explain how to find these all things. So that's all for today. Thank you. Bye bye. Take care.